Now it is time for our investor panel, which will deliver valuable insights on the current state of play in space investment, funding access, and how the investment landscape is expected to evolve over the coming year. Our moderator for this panel is Carrie Mullins, Director of Analytics at Bryce Tech. She has over 25 years experience analyzing and forecasting space markets, advanced technologies, and systems for NASA, the military, and the commercial space industry. As a technology forecasting expert, Carrie has led a retrospective analysis of technology forecasting to determine the most accurate forecasting methods and timeframes. She moderated this panel last year, and we are thrilled to welcome her back again. Please join me in welcoming Carrie and her panelists to the stage.
Good afternoon, and welcome everybody. I think we're going to have a really interesting panel here today with our panelists talking to the startups and giving you some advice on how the capital markets are looking and what kind of growth we can expect in the future. I'd like to start by asking our panelists to introduce themselves. So if we can start with Mislav.
Hi, my name is Mislav Talusik. I'm a co-managing partner at Marlin Spike. We invest in early stage companies that focus on aerospace and defense.
Hey, Tom Gillespie, managing partner at Incutel. Incutel is a strategic investment firm that works with the U.S. national security community.
Hi, I'm John Lisakowski. I'm a vice president with AE Industrial. We're a private equity firm that specializes and focuses in aerospace and defense and largely in space, investing all the way from venture capital stage all the way up through majority investments.
Hi, I'm Lewis Jones. I'm an associate at Generation Space, which is just the US brand name of Seraphim Space. We're a space-focused venture capital fund, invest at multi-stage.
Wonderful, thank you. So I think as we've all seen in the last couple of years, the activity in space is significantly increasing, right? Record numbers of satellites going up, record numbers of launches. In 2021, we saw a record amount of investment. And in 2022, not so much. So I would like to start by asking our panelists to talk a little bit about that current funding in the capital markets. What are the key factors that have changed over the last 12 months that are affecting that access to capital?
Do you want me to go first? So a couple of things are going on, and what we're seeing is venture capital funds are raising a lot less money, and as a result of that, there's a lot less money available to be deployed out there. And then second thing is, I think we saw a little bit of a fad developing around space in 2020 and 2021, where we had what we call tourist investors coming in and investing because it was cool to invest into space. Now, a lot of them have moved on, and now AI is cooler than space, so they're kind of moving and doing a lot of things in AI. But fundamentally, when you really look at it, I tend to believe that good companies always get funded. It doesn't really matter what the market conditions are. Yes, 2022 was really a bad year for startups for funding, but you take a look at a good company like Anduril, they raised $1.5 billion, which was a record amount raised by a startup in a pretty bad market.
I think part of that story too is about exits. So in 21 in particular, there were a lot of exits via SPAC, which ultimately didn't go that well. And so as you look at the space sector and what happens going forward, you have to think about how you get liquid on these different investments. So I think that's part of the equation here. And I also think more broadly, you touched on this as well, but the market in general has not been great on the venture side. And so I think that has leaked into the space sector as well. So it's not just a space sector story on that front.
Yeah, no, I agree. And I think early on it was really easy to raise money, and now a lot of those companies have burned through a lot of cash, and when they're going back to ask for more, that story's not as intriguing and interesting, as exciting as it was 2 years ago. But to your point, I think the companies that have done well and were conscious about cash spending and their burn, they have done well in re-raising more rounds and even increased the value of those rounds.
Yeah, just to add a bit more color, so it's all driven by interest rates, and so now interest rates are a lot higher. Generalist investors much prefer to invest and get 5% on treasury bonds when it's guaranteed versus risky startups. And so that allocation to venture has completely changed. We're seeing fewer generalist investors come into market. And so if venture funds are finding it harder to raise funds, they're lengthening their deployment strategy, means we're making $10, $20, $30 million have to last 3 more years as compared to before as well.
Yeah, there's also a lot of venture money basically captured and caught up in investments from 2021 that, to your point, there hasn't been an exit, there's been paper value increase, but they haven't really returned to that capital to be able to redeploy it yet. So that's also been tough.
So that's taking that look back, but let's look a little bit forward. How do you think that funding environment for space companies is going to develop in, say, the next 12 to 18 months? John, would you like to go first?
You want me to go first?
Sure.
Oh, sorry, go ahead.
Yeah, sure. Hopefully positively. So I think we're seeing some easing up in the market. So seed has been relatively healthy, and I think this is the first quarter we've seen Series A pick back up. Hopefully we go through the different stages again, but I think this is just a reflection of all venture funds that were actively investing beforehand, taking stock on their portfolio, taking their time, and then now starting to look at new opportunities again. So hopefully just seeing much bigger opportunities come through.
Yeah, I think the rest of 2023 will probably be similar to what it's looked like so far this year, relatively flat. And then I think 2024, we'll start to see more of a pickup as more capital gets out there and gets deployed.
Yeah, I think that's right. I also think you kind of touched on this, but it's somewhat stage dependent. So right now, it's better to be an earlier stage company, I think, than a sort of growth stage company. If you're looking for $50, $100 million right now, and you don't have a lot to point to in terms of milestones that you've achieved, it's tough to raise right now. If you're earlier stage and you're just getting started, I think it's a little bit, it's not easy, but it's easier. So I think, we'll see that play out a little bit more. I think as you go forward, 12, 18 months, I think even the growth stage will get a little bit easier.
I think part of it is these companies are now having to justify the valuations they raised at in 2021, and that's pretty hard to do. So those companies are just extending runway at the moment and trying to knock off those big meaty milestones they need to hit.
Tom, you mentioned SPACs earlier. What do you think the legacy of these SPACs will be, and how do they affect investment going forward?
We were talking about this at lunch. It's not like it's a new vehicle. I mean, it's been around for a long time. I think it just played out in a sort of maybe unproductive way for the space sector in around 21 and into 22, I guess. I don't think in some cases it was the best vehicle for some of these companies to go public. We'll see less of that, obviously, going forward. But I don't think it was helpful in general to the sector.
Gotcha.
Maybe in the short term, it looked like it wasn't helpful, but I think, look, this is market at work and creative destruction, and these kind of things happen, and they're not pretty. But if you really look at it from a different perspective, it was a good thing because it pruned a lot of the investors that, quite frankly, didn't necessarily know how to invest in space, didn't understand how hard it is, and what are those things that you need to look for when you invest into those companies. The only thing they were looking at is, oh, I invest here, 6 months later we're going to SPAC and we're going to basically triple our money. If you have that kind of investment thesis, you should probably go take that money and start buying lottery tickets, rather than playing a long game. Because look, building a good company takes a very long time, and it's not something that's done over a couple of months. It's done over a span of years. You're talking 7 to 10 years here.
I think one of the things we're seeing from some of the SPAC companies and other companies is acquiring, diversifying their products through acquisitions. How does the M&A activity look in space at the moment, and do the larger companies continue to have an appetite for kind of acquiring the smaller startups at this point?
Yeah, M&A, I think, is at an interesting point. There's a lot of companies who did decide to go down the SPAC route, have had a challenging last couple of years, are in a tough financial spot right now, and I think that actually is, for some companies who have the liquidity and the ability, that's a great opportunity for them to pick up still good technologies, good teams. They may have been, not the right company to go to a SPAC, or it may have been too early, or whatever you think the issue is. But now they're at a point where their valuation probably is realistic. their forecast and pipeline and backlog and all the things that each of these companies kind of sold us all on 2 years ago is now, more realistic, more achievable. And I think those companies are going to get picked up and hopefully picked up by the right, parent companies that can inject the necessary capital, inject maybe a little bit of discipline, and kind of fuel those technologies into things that we really need. So, as an investor, I'm excited about it. There's opportunities that we're seeing that, I think now that the valuations for those companies are more realistic, it really gives us something to, get excited about and look at.
Yeah, I think part of the acquisitions in the last year have been these SPAC companies trying to acquire revenues, to be honest, because they have to justify revenues to market. I think more recently, it's been very well-funded VC-backed new space startups, which I think this is the first quarter where acquisitions have been led by new space rather than traditional space, which is pretty exciting. And it's about broadening the product offering. So EO businesses acquiring analytics businesses or other modalities, or SATCOMs businesses, all the way through their value chain.
Very interesting. Lewis, so I want to ask about kind of the pros and cons of space-specific investments. How do you see those after the past year?
I mean, we're all in on space investing, so I can't speak too negatively. Look, I mean, pros, there's still a massive market opportunity, and I think that's still, everyone is still pretty receptive, even generalist investors to that. The negatives, depends who you're asking. I'd say to generalist investors is still lacking understanding on the tech and discipline around that, and I think we've obviously seen that over the last year. And then these are still very capital-intensive businesses, so focus on runway and deploying capital pretty sensibly.
Let's actually pull on that a little bit because we have a lot of startups in the audience today. So and maybe everyone can kind of take a chance on this one. An advice to these companies, right, early stage companies in such a capital intensive sector, how should they think about their funding strategy and balancing the need for liquidity and runway versus R&D investing in operations? Go ahead, Misa.
So generally, when we look at any company and we diligence, we always want them to raise at least 18 to 24 months worth of capital. And the reason for that is because these CEOs and the companies really exist to build products, not to play investment bankers. If they like to raise money, they should go get a job at Goldman Sachs, not run their own engineering company. So that's the first thing. But then the second thing where you really need to spend a lot of time thinking through is the valuation. And it's not necessarily that always higher value is better. Valuation is always a factor, actually, of execution, right? So if you value the company to perfection, that really means you need to execute to perfection. So if any bump gets hit, you hit a bump on the road, you're going to be in trouble. So you need to really kind of weigh that and give yourself room to execute and perhaps not stick to perfection. And then the third thing is, a lot of times what I see with founders is they look to the valuation, wherever you can get the higher valuation, and they don't necessarily think through what does raising money really means. Yes, it is getting the capital into the company to grow it, but the way we really look at it, this is the ability for you as a founder to go higher, effectively help from investors that specialize in this field. They know something about it, have the connections, and they can help you grow the company. Spending time and figuring out who those investors are and making sure that you have the good representation on your cap table that can really help you can sometimes mean the difference between success and failure. And what that really means is fundraising usually should probably take a lot longer than what we saw back in 21 when rounds were getting done in literally a couple of weeks. Markets not as attractive today, but also you got to really, really think through in terms of how do you get proper guys like Tom on your cap table so that he can bring all the resources that he has at his disposal to help you.
Yeah, I'd say a couple things. One is, you touched on this, but not just valuation, but also how much you're going to raise.
Yeah.
So raise the right amount of money that you can go execute the milestones you think you can achieve. Don't raise too much, don't go for too high a valuation, sort of be realistic about what you can do and how long it's going to take. And that typically works out the best. Easy to say that, but think about really taking as little as you need just to get to the milestones you want to achieve. And then again, what you said on the investor side and the board side is, put together the right set of folks around your boardroom, and you'll get a lot of good advice. You'll get a lot of support. I think that's really important. The companies that do the best, in my experience, are the ones that have really good boards. So don't undervalue that.
Sorry, I do want to get you
okay.
to answer, but what do you think of the makeup of the board? So people in the space industry and the investment industry, like a mix, who would you say, what makes a good board?
So early stage companies are going to have probably 3, 4, 5 board members. Every company's different, but you've got some founders on the board, you'll have the early stage investors on the board, and typically an independent. And that, I think, is where you bring in maybe somebody who's got expertise in the space sector specifically, or something else relevant to whatever that company is doing. It doesn't have to be the space sector, but bring in somebody who knows what they're doing, is a bit impartial, and can make good introductions as well. So that's sort of what these boards typically look like, but they're all different.
Great. And John, I'd like to go back to you for your advice to startups.
The one thing I'd add is, be upfront and honest about, what you're using the cash for, what your cash burn is, what your real pipeline and forecast is, and be working and spending the most amount of your time with investors that know the industry. I'll talk with a lot of people who, they've burned through 20, 30 presentations before talking to someone like us, and it's you can sense the refreshment from them when you talk to them, because we actually know the industry, we know the struggles and things like that. And if you're dedicating your time with those folks, I think your hit rate's probably going to be a lot better than just getting as many emails and phone calls as you possibly can. But like I said, if it's the proper investor, they're going to do their diligence and figure out the answers to these questions anyways. So I think the more forward you are about it, the more realistic you are about it, I think that's only going to benefit you. And then, depending on where you are in your stage, knowing what you don't know is a really important thing. So making sure you're bringing on, if you're strictly in the engineering side, which is my background, bring on someone from the finance side who knows how to build a budget, knows how to think about cash burn, right? Because that's not your background, your expertise. So I think the earlier you bring those folks on board, even if it's diluting yourself, all that's going to probably increase your rate of success kind of going forward.
I don't have too much to add to what my fellow panelists have said, but just to say, I think a lot of companies are now reevaluating their milestones, making sure they're that much more significant, because the milestones they set during this low interest rate period probably no longer stand.
I'd like to talk a little bit about the customers. So we have got a lot of commercial startups. Do you think it's important that they start looking at, or perhaps even pivoting to government customers and bringing in that set? And we can start with, I think, John and Tom, as your funds focus a lot on national security.
Yeah, you almost have to, given where all the funding's coming from. It doesn't mean that you're always going to be focusing on the government customer for the eternity of your business, but the reality of it today is that that's where a lot of the money is kind of funneling down from. And that's not a bad thing. The other thing that's nice about that is, with the government putting out proposals and stuff, they're literally telling you exactly what they need, right? So hopefully some of your technology that you're developing is lining up with where you're seeing money and proposals coming in from. If not, that honestly may be something to think about. Either you need to raise a lot of money now and you have a really good idea that's going to be perfect for a couple of years from now. But if that's not the situation, then you do need to realign with where capital is coming in from. And I think the other thing, which we talked about, is kind of knowing what you want the composition of your business to be, 3 years from now, 5 years from now, in between, in that split between government and commercial. Obviously, it's going to change depending on what you win and where you go, but at least trying to build towards something and kind of thinking about that early on, I think is important to do.
Yeah, I think if you go back a few years, a lot of and I'm thinking of remote sensing companies in particular, but a lot of the companies got started early in sort of the venture-backed space craze, were claiming that they weren't going to be focused on the government at all. And that didn't last very long. They eventually saw where the market was and went towards that and sort of flipped around. And I think they'll come back to the commercial sector, you know, in the next few years. But really, they completely pivoted and, you know, started focusing on government. And I do think in a few years, you'll see better markets for, you know, optical and SAR and probably RF and other constellations of small sats. So, but yeah, that's, you know, the early business plans were like, hey, we're not going to touch anything in government. And they learned quickly.
Lewis and Mislav, would you, along that line, would you recommend that some startups go after like SBIRs, participate in those programs with the government? There's a number of not just NASA, but DOD, early innovation type programs.
So SBIR is a two-edged sword really here. And like any other tool, if it's used properly, you can get a lot out of it. So SBIR, it's a grant to go and develop a technology or a product. That's really what it is. It is not a source of revenue. And for better or worse, I tend to come across a lot of founders that win a SBIR contract and they spend during the call explaining to me how they have revenues and the government's all in, and why would the government spend $500,000 or maybe even $1 million if they wouldn't be a follow-on contract for all of that. And reality is, no, that it's a grant. It's actually a grant that's not all that difficult to get. And a lot of times, what I tend to see is these companies then kind of reach this crossroads where they have to go spend time with friendly guy like me who says no most of the time, or go write another SBIR grant. And it's a lot easier to go get another $500,000 or $750,000 from the government than it is to get that money for me. Now, having said that, if you use it properly and you really understand how does the process work and what is the strategy to really utilize this tool to get to that phase 3 and get to those significant revenues that you can, by the way, that is hard, then it can be very, very useful.
Yeah, to your point, it depends how aligned it is to the customer or the ultimate customer within defense as well. I mean, all too often we're seeing companies say, oh, there's a 3-year, it will take 3 years for us to get into a program of record through the SBIR, which is obviously not very realistic. And lots of companies fall into the trap of just being a SBIR house. So they come off one SBIR, come on to the next one, without it being aligned to a specific product or customer. So pretty dangerous, but we try to evaluate them carefully.
Yeah.
Gotcha. Let's think about the companies in your portfolios or that you've worked with, that you're currently working with. What would you say, that the best that you're working with, how have they been coping with the current funding environment?
Truth is, the best companies are getting funded still, but genuinely the best companies that aren't getting funded are figuring out ways to extend their runway. They're being pretty disciplined about how they cut costs, and that means laying off of the workforce for some. And then they're thinking about what milestones they need to hit. So speaking about what I was speaking about earlier, reevaluating their milestones. Are they significant enough to be able to go raise that next round? And then looking at what grant opportunities exist. It's just a complete focus on runway. Cash is king in this environment.
Yeah, I'd say even the best companies that are getting funded right now, it's like a good outcome is a flat round right now.
Yeah, absolutely.
So you're either getting that, you're extending runway via a bridge, or you're just kind of buying time.
Yeah.
And the companies that aren't great are not, they're getting down rounds at best. Having said that, again, it's stage dependent. So I've got one deal that we're probably about to close on, and it's really a Series A, completely oversubscribed. Valuation started to run away on us. And, so it is still happening. It's just not happening as much.
Yeah.
Yeah, I think the discipline thing is one, because a couple years ago, it was all about total addressable market. How many things can you act like you're applicable to, which caused a lot of people to hire a lot more and try to be developing multiple types of product lines. I think now, at least for some of the investments we have, our conversations are like, hey, let's focus on what are you guys best at? If that's if that's one of the 4 things that you were doing, that's okay, but let's win at that versus trying to have a 25% chance on 4 things. So that's been a theme we've been seeing.
You know, one of the issues that I see even with really good management teams is that the addressable market is just not there for a lot of these companies. They came in thinking or deriving through some analytical process that it's billions, and then it turns out that it's actually tens of millions, and that is pretty difficult when you're sitting on a, say, $100 million valuation and the total market's $50 million. The math just doesn't work for something like that. So what I tend to always tell or advise all of my founders is, look, give yourself room to pivot and to try to do different things where you're deploying core technology for different products, different problem sets. And a lot of times, quite frankly, with a lot of people that are involved with space, I tell them, well, let's look down on Earth and see what's kind of closer here, where markets potentially exist, where you might have a game-changing technology or a game-changing way to doing something, so that you expand that market from 50 to 200 or maybe $500 million, and that will kind of provide that bridge and give it time until space ultimately will get there. I fundamentally believe that. If I didn't, I wouldn't be investing in space. But like everything else, in the beginning it takes a lot longer, and then it takes a lot shorter, and we're probably in that phase where it's taking a little bit longer. A couple of years from now, we're going to be seeing a huge acceleration.
So that's a great lead into my next question. Let's talk about the future and the growth of the industry. So where do you see maybe in the next 5 years, like what markets, where do you see the primary growth in the industry? Go ahead.
Well, so I see a lot of opportunity in space manufacturing, and doing things like I read about this company. They're looking manufacturing 3D printed retinas. How much would you pay to get your retina back? A lot, right? They don't even need to be talking to the government. If they can figure out how to make that work, forget the government, forget marketing, just put it all into science, and if you can get it to work, it's going to work out. It's going to be perfectly fine. So I think that's one area. I think there's something to be said about communications. We've seen SpaceX, we've seen Apple, we've seen another company called Link, where they linked up normal iPhones to satellites. That's a game changer to a $1 trillion industry right there. Huge opportunity. Imagine you're connected all the time, wherever you go. Wonderful, right? Great. And the other thing is, it's also, what I'm seeing is earlier this year, there was a big $750 million round that was funded by A16Z into SpaceX. And what that money was really used for was to buy out or give the employees of SpaceX the ability to sell some of their stock. And what are we seeing now as a result of that is, you saw these folks that were there for 5, 6, 7 years. They've learned a trade, and they took this as an opportunity. With like, look, I made some money, I've learned some things, I want to go out and strike out on my own. We're finding that a lot of those guys who did that are actually going out and starting their own companies. And this is very, very interesting, because they've been in the industry. They understand how hard it is. They understand where the problems are, and they bring a ton of experience. That's a little bit of a game changer, because a lot of times when we had a lot of these earlier space entrepreneurs, there just wasn't that much of space experience. So funding those types of opportunities are extraordinarily exciting for me.
Would anyone else like to discuss the next 5 years, where you see the growth opportunities?
Sure, I'll say a couple things. So we've done a lot of space investing over the last several years, and we've got 40-something companies in our portfolio at this point. It kind of runs the gamut. I mentioned the remote sensing aspect, but we've looked at launch vehicles and comm systems and lots of componentry. We'll probably go back to those areas to some degree, but looking forward, we'll also be doing a lot of on-orbit logistics-related things. So orbit transfer vehicles, rendezvous and proximity. We are looking at direct-to-handset opportunities, some ground systems. So kind of the whole gamut. But all of them are key to different elements of what we're going to see in the next 5 years.
Gotcha.
Yeah, I mean, one for us is, there's an exponential amount of satellites going up. They're all collecting, in my mind, an exponential amount of increased data, and all that has to make its way back down. So to your point, we're looking at that network, whether it's RF, whether it's laser comms, whether it's the actual, nuts and bolts on the ground communication side. You see a lot of talk about satellites and the numbers, I think there's going to be 50,000 satellites by the end of the decade, but not a lot of talk about where all that data is going and how it's getting to, to some of your points, to the, to your phone. So that's a part of the value chain that we're spending a lot of time on. Then mobility in general, that can be launch vehicles, that could be in-space propulsion, that can be transfer vehicles. Again, the numbers of satellites that are going up are all going to need engines, fuel systems. There's a lot of problems there still that need to be solved, and there's a lot of technology that's been used for 50 years now and had very little innovation. That I think as the numbers of satellites go up, people are looking to save more costs on the total satellite vehicle. Some of those critical subsystems are going to be spots where a lot more attention is put in to kind of see where that can be developed.
All of the above. I mean, we've already mentioned a bunch of different domain. I think realistically, it's going to be largely driven by the sectors we already know today that have fueled most investment. So SATCOMs and remote sensing, they both haven't fulfilled their ultimate potential. And there's going to be a lot of growth within the next sort of just few years as part of that. And then we're paying particular attention to in-space manufacturing and pharma in the short term too. Yeah. But I don't think that's going to be necessarily a 5-year time frame. That might be a bit longer.
So let's kind of pull that a little bit, looking at the infrastructure platforms, right? We're at the ISSRDC today. Where do you think the greatest value creation opportunities are for these platforms? Is it tourism? Is it astronauts? Is it bio manufacturing? Where do we think it is?
In the short term, I'd probably say astronauts. I mean, we're already talking about missions for foreign governments who have just started out their own space agencies, like UAE and co. And they're all wanting to put up astronauts onto any platform sooner rather than later. But then I think ultimate growth, we're probably thinking biopharma, maybe manufacturing, as sort of that 10+ year time frame.
Yeah, I would agree with that. I think, with astronauts is where they're going to live and work and what subsystems are needed to make that possible. That's definitely a key area. Yeah, that's probably what I would say.
Yeah, look, the math is fairly simple on this, and I don't want to be talking up my investment book, but NASA spends about $3 billion a year on ISS operations. As we all know, 2030, the ISS is coming down one way or the other. We are at the end of the life of that physical asset, and if we look at the CLD program, basically that $3 billion is going to get transferred to that program. Maybe there's going to be some type of a haircut or a discount or something like that, but that's a huge opportunity if you're looking at investing into a sector where a company has a shot at basically winning a multi-billion-dollar contract from the U.S. government. That's going to be, quite frankly, ongoing. This is not going to be one or two years. It's going to be ongoing as long as NASA or the U.S. government feels that it's going to have the need for manned space.
So it seems like, again, here we're saying that base government customer for these platforms is going to be one of the driving factors.
For sure.
I think we're seeing a lot of interest, right, in the biomanufacturing in space, and that would be much more commercial. And I believe, to your point, have a lot of terrestrial applications, and that's kind of what we're looking for here. So how long do we think it will take before that kind of becomes the bigger portion, where the commercial piece kind of outweighs the supporting the government?
I'd probably put it in a 5 to 7 year range. And now, having said that, whenever my wife asks how far are we are always 10 minutes away, even though it's 3 hours. So just to put that 5 to 7 years in perspective for you guys.
I think it might be slightly longer than that, in my opinion. I do think this is going to be an area where the government's going to carry it a little bit for a while. And those markets will develop, but I think it might be a little bit more slow than we think.
Yeah, I think what's tough is those end markets have no exposure or idea what space is today, right? So to your point, someone's going to have to prove that technology first on their own, and then kind of make that value pitch to them, and have the right companies take that right leap of faith to put in a serious amount of capital into space to try to make that work. I think the The benefit of that is these are companies that have no idea what space is like. So the companies in space today that have figured this stuff out are going to benefit tremendously from that, right? Because you're going to be able to partner with pharma companies, manufacturing companies, et cetera, and look like geniuses because they have no idea what they're doing. You guys will. I think that'll, create obviously good opportunities. But, when that happens is obviously tough. But, my number would be 7 to 10 years.
Yeah, I think I'd agree with that time frame, slightly longer. Just there's a little bit of chicken and egg where the infrastructure isn't quite there to do it, and that's going to take a long time as well. But that stuff's not going to be funded until there's enough customers for that element. Yeah. So which gets funded first? Who goes all in first? That's a tough question.
Let's thinking about the business models of the CLD providers or other potential platform providers. Do you think there's kind of a particular business model they should be looking at that would encourage more investment into these kinds of companies?
Well, like everything else, I mean, when you, at a very sort of fundamental level, look at a company, yes, it is the amount of money that it brings in, the higher the better, but it's also how repeatable this process is. So if you one year win $1 million contract and then never win anything else, there really isn't a recurring business here. So how do you think, I would encourage all the entrepreneurs to constantly be thinking like, look, once you get that first contract or a pilot program, whatever it is, how do you scale that? How do you expand that? And how do you make sure that basically everybody needs this product or can benefit from the product? A lot of times we come across companies that basically come to us and they pitch, look, if we do this in space, we could cut the cost versus drones off 20%, 30%. Those types of things are just not interesting to us, right? The rule of thumb is you got to be roughly about 10x better, right? And it's difficult to define what 10x really is, right? Going from a propeller to a jet engine, that's a 10x increase, right? And when you find that 10x, you kind of find that it's just not, the price point becomes less of a, much less of an issue, right? Look at what happened with cell phones, right? They're 10x better than landlines, and that's why we're now spending hundreds of dollars to have this thing. It's the same thing with space. I tend to find that a lot of people are looking at what's happening on Earth and trying to replicate this from space. The better way to look at it, and this is why I'm excited about pharma, is a whole new set of capabilities where you're doing stuff that you cannot do on Earth today. With crystals, because there's gravity and all sorts of other problems in this particular environment. I think that's the type of mindset that you need to have, and that will kind of resolve the business model issue with respect to pricing, recurrence, and ultimately the size of the market.
Would anyone else like to comment?
I mean, the thing I'd add to that is, with space, you got to be very conscious of like how expensive and difficult it is to get your raw materials up if you are trying to do pharma or any sorts of manufacturing. And then reverse, how fast can you make it? And then how fast can you get it back down, right? Because you are going to want to have repeated revenue. These can't be materials or projects that take months to build and, months to come back down. It needs to be, obviously relatively small pieces of material of high value that are easy to get up from a raw material perspective, relatively stable enough to kind of get back down easily as well. In my mind, those are the areas that, at least out of the gate, are going to do well first because the math is going to work out the easiest for that.
I think you got to be realistic too about the dependencies. What else is interwoven in your assumptions on your plan? Yeah. And when's it going to happen? Because if you're counting on something happening and it gets pushed out a year or two, that throws your business into a disarray as well.
Yeah.
Okay, and let's see if we have some questions from the audience.
Yeah, sure. So first one is, will commercial space station developers find it easier or harder to raise money than other parts of the space economy?
Look, I'd like to think that it is easier because you do understand that the market and the dollars are there, and a lot of times in venture capital you take on what's known as the industry risk, and that is, the question is, if somebody came to you 20 years ago and said, look, I've got this great idea, I'm going to put pictures on the internet and I'm going to put a like button underneath it, and it's $1 trillion idea, you probably walk away from that pitch and say, this is crazy, it's never going to work. Until it does, and then it really does become that. So my point is, it's really hard to diligence something like Facebook 20 years ago. But when you're thinking about the CLD, you start to just kind of game out the geopolitics, right? Will the U.S. government give up the high ground in space? Highly unlikely, right? So what is the U.S. government doing today? Okay, well, it's investing in CLD. There were basically awards given in December of 2021 to three companies, and then ultimately, you know, we're sharing it today with Russians, and the asset it's at its end of life. So you kind of put all those things together, and you're like, wow, this huge amount of risk here with respect to the market has basically been from more or less taken off the table. So now we really got to figure out which one of these companies is going to be the one that's going to win it. But that's a lot easier question to figure out than to be like, look, 20, 30 years from now, are people going to be doing X, Y, Z, whatever that X, Y, Z is, my opinion.
All I'd add is sort of depends on how these NASA CLD contracts actually follow on. I don't think we have any understanding yet as to what that looks like, and so these companies definitely need that government support to validate that they're a potential initial customer. And then likewise from foreign governments, so many of these companies are being funded by sovereign wealth funds. So if there's that buy-in for using it as a platform for them, I'm sure a bit easier to get funded than some of the other companies.
Yeah, I think that's the interesting piece is you have a lot of foreign nations, you know, friendly to the U.S. that want to be involved in space somehow, but you know they aren't creating the technology for launch vehicles or aren't doing Earth observation systems, but you know, they can train astronauts and eventually, you know, use someone else to get them up to space and do experiments and kind of promote that inside their country. That's an interesting piece that, you know, the ISS touches only a fraction of, but I think once there's, you know, a broad set of stations for that to happen on, I think it's going to expand, you know, quite nicely that way.
Yeah, I'm not sure the risk has been eradicated, but it was lessened with those contracts, but it's still definitely out there. And I think to the question, about, you know, how do we look at it from a venture capital lens? Yeah, I'm not sure I look at these as kind of venture capital backed opportunities. It's, you know, there's a lot of government in here. That's really going to carry the day. And I think, you know, and we'll see how it all plays out, but they're not really kind of VC plays, in my opinion.
Do we have another question?
A follow-up question on the same topic. Do you see formation of companies that will be future users of the VASTs and VARDAs and CLDs of the future? Do you see accelerated pace of activity there?
Oh, yeah, for sure. I think you know, these things ultimately are pieces of infrastructure and pieces of tools. They're not end products themselves. And then as you know, people figure out, you know, what's applicable for space, where can you get better materials, cheaper, and all of that, they're going to start using it. And then, you know, same thing I think with CLD. I mean, I don't know about you guys, but I'd love to go to space, right? The only problem right now is I just don't have $45 million sitting around, right? If you do, call me. You know, but as the cost comes down and becomes something that's actually affordable, yeah, absolutely. I think you'd probably have lines of people lining up and saying, yeah, I'd love to go spend a weekend or, you know, a week in space and use that infrastructure. Those types of end products will develop over time as we build out this infrastructure and prove it out.
Yeah, I think there'll be a lot of companies, you know, piggybacking on that. I think the difficulty will be they're 100% dependent on that technology working, right? So as they're looking to raise money and thinking about their timeline, they're not really in the driver's seat on the main piece that they need to be in place for their whole business model to work. It's kind of like a lot of the same companies now today that have a great business model that works once Starship launches. That's great, but that's tough today, right? They can keep pointing to that, but until that's actually a feasible thing, their business model is a bit difficult. So it doesn't mean that technology is bad or that idea isn't going to work. It just then plays into the timing thing, which is, for investors, always difficult to kind of judge someone on.
I actually thought of another question while you were speaking about the CLD players and the U.S. not ceding kind of the ground in that. So how much influence does geopolitics have kind of on your investment? So when you look at a company and maybe the regulatory environment is not in place yet, does that affect your choices when you look at CLD providers? And we think about, would European countries want their astronauts on a U.S. commercial space station? How do those kind of aspects affect?
Yeah. Do you want to go? It's going to say.
That's you. That's got to be you.
Yeah. So I mean, we exist because we work with the National Security Committee. So that's part of the story for us. So everything we look at is through the lens of, if we make this investment, will it create a capability? Will it get adopted by the intelligence community or the defense community? That's just that's why we make investments. We're a little bit different from that standpoint, but we do look at not just what the commercial market is, but how can we kind of bend this to something that might be useful in the intelligence sector. But that is, again, we're strategic, so.
Yeah, we don't like to rely on the thesis that of the sovereignty play, like many of these foreign launch companies that only exist because there isn't that solution in their own country. Right. I mean, I'm not saying it's not a viable model. We just don't like to rely on it as a thesis. It just feels like you're constraining your market. You're picking who's going to make a decision based on that, and it's practically only government. So not all that keen on that model. But I think leaders in any part of the market are being picked by foreign government anyway for their solution. So it also depends if a part of it is commoditized or not. I think we're seeing in space domain awareness, Leo Labs is having quite a lot of influence over different geographies as well.
I was just going to add on, I think this is less relevant to space stations, but point at what's happening in Ukraine right now. Like commercial space in general is kind of having a moment in terms of supporting the conflict, and clearly the value that's being shown to the government in capabilities that are funded commercially. And so I think there's a lot of recognition right now on the government side of, okay, maybe we can leverage these more. How can we do more things with these? So it's a topic of conversation right now.
Look, what is really interesting is the fundamental change in the business model, right? I mean, for a long time, NASA was owner and operator of assets. NASA went out and bought Space Shuttle, right? And now it's different, right? It's renting out room on SpaceX rockets, and they're going up. CLD is basically designed to wean NASA off of that whole idea of we got to own the assets. And what that I think is really going to do is just going to accelerate the innovation coming in from the private sector. And if we maintain this approach, I think our allies, quite frankly, are not going to have a choice. And a great example of this is compare SpaceX and Ariane, right? SpaceX landed reusable rockets back in 2015, roughly. The last time I heard, Ariane's going to start thinking about developing a reusable rocket in 2030, 15 years later, thinking.
Yeah, I mean, one thing that's interesting is, space is relatively friendly today. I don't think that's always going to be the case. So I do think other countries are going to, basically be forced to make investments into space, which is probably overall good for the industry because they'll be developing their own technology, innovating, et cetera, forcing us to innovate more, where that doesn't really exist today. But I think, again, you look long term, I think that's a real reality we're all going to have to kind of face.
So do we have any other questions from the audience?
Yes, we have a few more here. So one of them is trying to factor in a number of kind of evaluation criteria for investment across market potential, competitive advantage, management or skill set quality. financial viability, risk mitigation, scalability, et cetera. So if, from your perspective, where the industry stands currently, if you like try to integrate all those factors, where do you see other opportunities here, is in addition to the kind of pharma manufacturing you mentioned?
Yeah, look, I think we are at a very exciting spot. And, go back to my earlier remarks about that, massive amount of money going into SpaceX, where you have these employees that have now walked away and they have the money and they're starting the company. So I think something like that is very exciting for the industry at large. I think the development as a result of that is going to accelerate. I think also the fact that you've got a proliferation of industry specialists from the investor standpoint of view. Like, look, I just invest in aerospace and defense. You have the best consumer company. I don't know what to do with it. So my answer is, look, it's not a fit. Go talk to somebody else. So you're getting proliferation of these specialists who can help you, and as a result of them raising more money, that's what's known supposedly smart money. Although, look at me, I don't know if I'm smart or not. But in either case, I think those are all the fundamentals that you need to build a strong industry that's going to rapidly evolve as a result of that.
Yeah, I think part of that question was, what do you look at in general as investors? And I echo what Mislav said, which is, number one is the team. So as we see teams emerge from pretty interesting places to start their own companies, that's going to be great for the industry. But in general, across the board, not just with this sector, we look at, who's in the room, what's the team like, can they execute? If things go awry, can they pivot and find something interesting to do? That's really kind of number one. And then after that, you get to, how big is the market? What's the competitive landscape look like, and how do we see these guys fitting into it? But I think the team element and what we're seeing in general, what's happening in the space sector is really going to be promising.
I don't have much to add.
Okay. And you said we had a couple more?
There's a question in terms of for industry on information sources. What do you find useful, like areas of, deals, transactions, new companies coming about? Which information sources would you recommend those who try to educate themselves in terms of investability and in financial markets?
I mean, I'll give a healthy plug in to Seraphim, but we publish a space index and ecosystem map every year. So that's always helpful. And Bryce Tech publish a report every year. That's also very helpful.
Yeah, one thing there's now a fair amount of public space companies as well as all the defense primes that are spending a ton of time in space. So, tracking them, tracking where they're winning work, where they're spending their dollars. 5-10 years ago, that wasn't really available, right? Now it's kind of at your fingertips. So that'd be a spot I would definitely look at.
I'd add, so Space Capital also tracks the market pretty well. And then Quilty Space is an analytics platform that's usually pretty good.
I think that I would also say there's an online payload space, which does a nice newsletter that really kind of wraps up what's happening in investing every day. That I like a good deal. Do we have another one from the audience, or are we back to me?
I think we covered most of it. Just one more follow-up. In terms of, if you look at the technology development in space and investability, there's a lot of discussion of automation versus human in the loop technology development. And how do you, from investability perspective, look at that? Do you want to see a fast-paced automation? Do you see humans as a de-risking factor in iteration? How do you think about that?
So from a manufacturing perspective, automation doesn't really work yet for space just because there's not enough volume. Even some of the largest, bus manufacturers are, at most doing 100 a year, something like that. That number is going to drastically grow, but it's hard to put automation in at that point. So, we look a lot at, who's actually there, what do the technicians look like, is the company located in an area that can source good talent and make sure that that talent continues. So from a manufacturing point of view, I think where the industry's at right now is it's still very hands-on. Then if you kind of switch and look to like satellite operation, that's basically the complete opposite, right? Everything we see is all about automation, taking humans out of the decision-making. Tons of companies that are obviously focusing on that, government dollars that are going into that. So I kind of think about it from those two perspectives. One, if you're making it, you need hands in the loop. If it's already launched and on orbit, then it's as much automation as possible.
I mean, I think it comes down to scalability. So it really depends on what product you're talking about. But ultimately, telling me that you're going to automate the whole process within year one, I just don't see that as being realistic for lots of different processes. So I think just taking a pragmatic view as to if you do talk about ultimately automating a lot of it, and that's what's leading to positive margins, then you have to demonstrate a reasonable pathway to get there and talk about how you're going to start taking the human out the loop too.
Lately at Bryce, we get asked a lot about cislunar space. Because of the launch of Artemis 1, we're seeing a lot more excitement in that area, but only a few companies that I think are kind of startups in that. Is this an area that you're keeping an eye on as well? Are you seeing anything interesting there?
So we're definitely tracking it. We've not really made any cislunar or lunar investments at this point, but honestly, we get asked a lot about it by the government, saying, what are you seeing in terms of commercial activity? They're paying attention to it. A lot of these companies, I think, will be perfectly fine companies, but we're just not ready to kind of write a check at this point. They're still developing their plans in general, I think.
Gotcha. Anyone else?
Yeah, just unsure about timelines. I think that's the same as everyone. It probably was a lot more front of mind, say, 2-3 years ago, because that's what people were talking about, the CLIPS missions and all sorts. But the businesses that have been funded there are businesses that have a viable solution on ground, and then eventually looking to apply that on the moon, but nothing short term.
I think it's a particularly tricky one, as to your point, you're often looking for something that's a bigger market than can be just in space, and cislunar is going to be primarily kind of the government customer as a base, and maybe not quite as large as some people are expecting. So let's see, we've only got 7 minutes left. I want to give everyone kind of one last chance, kind of your closing remarks. What would your advice to this community be?
Why don't we start on that?
Yeah, sure. Just extremely excited about the market opportunity in space, and we're continuing to be active, investing in many different seed businesses. So come find me if you're actively looking to raise.
Yeah, likewise. I mean, there are a few industries that are continually growing from a budgeting perspective, and I don't see that changing at all. So it's the right industry to be spending your time in. It's got its challenges, like we all know, revenue is bumpy. But again, I mean, if you're talking to the right investor, which I think the panelists up here are, these are folks that are dedicated to the industry, know it well, have capital that want to deploy, and I'd love to speak with anybody about that.
Yeah, so, similarly, I think there's some short-term challenges here. We talked about the lack of real financial exits, talked about some of the bumpiness in the last sort of year and a half of funding. Short-term stuff. Long-term, I think this is a really interesting industry. It's going to keep growing. It's growing across a lot of different areas. So we're excited about it. It's not all that we do. We do a lot of other things besides space, but it's really it's the most exciting area I think we're looking at. And we do get a lot of questions from our government customers, a lot of interest, and so they're paying attention as well. So I think it's a great place to be.
Yeah, look, on my end, fine. I like to fund secrets, right? So figure out some secret way that nobody has figured out to do something a lot better, and then keep working at it and figure out how to make it work. And great thing when you're working in an industry like space is that there's also a broader mission associated here, right? I mean, like if you really are successful, we're building something that's a hell of a lot bigger than figuring out how to spot a cat inside a picture. And then third thing is going back to great power competition. I mean, if you want to take part in the greatest power competition ever, this is much bigger than, you know, British Empire versus China or anything like that. This is literally Western world and liberal democracies' dominance in space. This is a struggle that it's going to continue on, and we're at the first innings of that game. And you know, if you can contribute, you should.
I was going to add to that, just one of our hypotheses in general. We talked about cislunar and lunar, but you know, the geopolitical point here is, you know, what do we do best in the Western world? It really is driven by the commercial sector, and I think as we look forward and what's going to happen in, you know, space and we get further and further out, you know, that's really going to matter. So I think having the commercial sector be a driving force in space in general is important.
Great. All right. Thank you, gentlemen. This was very interesting. Thank you, everyone.
Thank you.